I just got assigned over $90,000 of Amazon stock. I know this was not a mistake. This is all part of the plan. Most people panic when they get assigned a put option, but if you know what you're doing, this is a great opportunity for you to make yourself some money. And to not sugarcoat anything and to be completely transparent with you, I was completely shocked that Amazon dropped to this level. Amazon actually beat their earnings. So if you would have told me Amazon's going to beat their earnings and they're going to drop to 214, I would have been like, you're lying. There's no way you're being honest right now. You're joking, right? Just tell me you're joking. So let's just go ahead and jump right into the portfolio and show you exactly what happened when I got assigned. And I'm also going to show you one little thing that I did right before getting assigned to kind of give myself a little more leverage here. So first and foremost, let's just look at the assignment, right? I had 4 different put options that I sold here. I sold 2 put options at the strike price of $222.50, which by the way, I never thought I was going to get down to that level. I had no idea I was going to be able to buy them at that price. I'm happy with it, but I had no idea I was going to buy them there, but I actually ended up getting assigned. So I got assigned for those 2 put options. As you can see, it's a total of $44,500 for 200 shares at that strike price. And I also got assigned my 2 put options that I sold at the 230 strike price. So that's a total of $46,000. As you can see, you have to make sure you have the cash set aside because when you least expect it, something happens in the market, something about tariffs comes out, something politically comes out, and the stock takes a major dip and you're going to end up buying the shares. So towards the end of the day on Friday, August 1st, I already knew that I was going to get assigned the shares. The stock had dropped way too much. It even dropped below the strike price of $222.50. And I knew, man, I'm about to get assigned 400 shares of Amazon. And for me, this is great because I believe in the company long term. This is why I tell you it is super important for you to do this with stocks that you believe for the long term. Because if something can happen in the stock market, it's probably going to happen. Okay, that's just the way that the luck goes, right? That's the way the cookie crumbles. So I'm actually happy that I got these 400 shares. But to give myself a little more leverage because I really did not expect this to go down below 214 again or at the 214 level, right? I said, you know what? Let me do something to give myself a little more leverage now before I get assigned these 400 shares. I bought another 85 shares of Amazon. So as you can see on the screen, I bought 85 shares of Amazon at an average price of $214.85. This brings my total shares of Amazon right now to 485 shares of Amazon in my options trading portfolio. So breaking down a couple of the numbers just to give you a little bit of an understanding of what I spent on this play right here overall. With the 85 shares that I bought before getting assigned, I spent a total of $18,262.25. At 4 p.m., I knew the assignment was coming. It said pending assignment. I said, okay, there we go. I got them. Gotcha. I got 400 shares coming down the pipeline, right? So for the $222.50 strike price, I got 200 shares. I ended up spending $44,500 for that. And then for the 230 strike price, I got another 200 shares and I ended up spending $46,000. If you add the $18,000 that I spent before getting assigned these shares, I am in this right now for a total of $108,762.25. But wait, there's more. Like that infomercial used to say, I think it was what, OxyClean, I think, or Mr. Clean, I don't know. I think it was OxyClean. But yeah, wait, there's more. If you remember the last video that I put out, the one before this one, the video I put out about selling options for Amazon during their earnings, I talked about how I wanted to double down on this because I really didn't think that I was going to get that strike price of $22.50, right? $222.50, I thought it was impossible. So I doubled down on my bet and I said, I'm going to get another 200 shares at $230. I'm going to get assigned those shares because that expires this Friday in a couple days on the 8th. So I will be completely shocked if the stock bounces back up and goes above that strike price. So hopefully, fingers crossed, it stays below that 230 range so I can get those other 200 shares to add to this position. So God willing, hopefully I get lucky enough that in 2 more days by August 8th, this Friday, I get assigned another 200 shares of Amazon. And those 200 shares are going to come in at the strike price of $230 once again. So that'll put me at a total of $154,762.25 to have 685 shares of Amazon in this position. And I know what you're thinking. You're probably thinking, Johan, you are absolutely nuts. And that's fine. That's fair. Some of you guys have voiced out your opinions in the comments and some people kind of have like a negative tone to it. And I get it, guys. This might seem scary to you, especially if you're new to trading options. I remember when I first started doing this years ago, I got assigned my first couple hundred shares. I think it was of Chewy. And I kind of freaked out. I was like, man, what the hell am I going to do with this? I got like 30 grand tied up in Chewy. That actually ended up turning out pretty well for me. I didn't know as much as I do now, obviously, but With Amazon, I'm not scared at all, guys. I'm hungry for this. I wish I had more money to buy another 600 shares at this level, but I'm out of money, unfortunately. But I will show you what I've been doing and what I plan to do in the next coming weeks with Amazon. Before I go over the covered calls that I just sold for Amazon, let me show you why I bought an extra 85 shares. Not only do I want to grow the position, I don't mind holding more shares of Amazon, but I also improved my average cost per share. If I would have just kept the shares how I got assigned, the 200 shares at the strike price of $222.50, along with the 200 shares at the strike price of $230, I would have had an average cost basis per share of $226.25. But when you add 85 shares to the mix at an average price of $214.85, you bring that number down pretty significantly. So now, as you can see on the screen here, I have 485 shares at an average cost basis of $221.05. Instead of having an average cost basis of $226.25, those 85 shares help me bring my average cost basis down to $221.05. That is a $5.20 difference. You multiply that times 400 shares, and you're looking at $2,080 that I just saved. And then I know the argument's gonna be, well, Johan, you didn't save it. You spent a bunch more money to add to the position. Yeah, of course I spent more money to add to the position. This is all gonna recover. I guarantee you that Amazon will be back above $230 in the near future. That's a fact. Having 485 shares of Amazon gives me the opportunity to sell 4 covered calls on this position. I'm a little short on selling that 5th contract. I'm about 15 shares short. But I'm just going to wait, and hopefully I do get assigned the other 200 shares by the end of this week. And by that time, I'll have 685 shares. I might end up buying the other 15 shares just to sell 3 more contracts. But anyway, with the current average price of $221.05, I sold these 4 covered call options at the strike price of $225. And as you can see, I only collected $15 per contract. $60 to have them expire at the end of this week on Friday. And you might think to yourself, Johan, $60, that's nothing. Yeah, it's not much, but it's $60 that I didn't do anything for. If I have to collect $60 a week for the next 10 weeks until Amazon recovers, I'll collect $60 a week for the next 10 weeks and I'll pocket $600. I'll put that money in my pocket and I'll wait for the stock to recover. As soon as Amazon gets back up to the 225, 230 range, I know I'm going to be Gucci. I'm going to be in really good standings because what I could do then, I can sell these covered calls above the 230 strike price and collect a little bit of a better premium to pocket more money. But I'm not in a rush. If I do got to hold these shares, I'll hold them. I have no problem holding shares of Amazon. And then once again, I beat this dead horse over and over and over. And I want to tell you guys, it is super important that you do this with shares of stocks that you don't mind holding, because at the end of the day, when this does happen and you do get assigned 400 shares, 600 shares, and you got, 140, 150, 160 grand into a play, if you don't like the stock and this is a shaky stock and you just did this to collect premium, your gut is going to tell you to bail everything, dump everything out, bail and run. And that's not good, because I know for a fact that this company is going to recover. This is one of the $1 trillion boys club companies. This is Amazon, guys. Come on, let's be real with each other here. Yeah, they're going to go through trials and tribulations. They're going to go through the little bumps, their little hurdles, but this stock's not going to stay down for long. Amazon's not going to go through a slump where the next 3 years they're in a drought. That's not going to happen. This is going to be something that works itself out in the next couple of weeks, maybe a couple months at max. And then Amazon's going to keep back going, doing what Amazon does, going on a tear. So that's pretty much it for today's video. I wanted to make this short and sweet, guys. I know people were pretty concerned about those put options that I sold. And, they thought, hey, it's a lot of money. You're going to get assigned these shares. That was the goal. The goal was to get assigned. I didn't think I was going to get lucky enough to get assigned, but luckily, by the grace of God, I got assigned the shares, even the lower strike price. So as you can see, politics and tariffs, they change the game of the stock market. They do make things move. If you're selling options, you have to please make sure that you're doing this with companies that you don't mind holding. I can't say that enough, because I feel like even though I say it a lot, I still get a message here and there. I'll get a DM of somebody saying, man, I am stuck in this, or, I sold a bunch of put options on HIMS and it tanked on me and now I'm stuck and the stock's not recovering. Don't do that, man. Make sure you're doing this with the stock that you really like and that you don't mind holding. So with that being said, if you got some value out of this video and you enjoy watching me make these crazy little moves, hit that like button for me. And if you're not subscribed to the channel, go ahead and subscribe. Let me know down in the comments if you're selling put options on anything, if you've been assigned on a put option lately. I'd like to see what you guys are getting into. But yeah, without further ado, I will see you on the next one. Peace.